Revaluation of assets. See, the original value of an asset or original cost of an asset, say 100. The depreciation provided in that year assumed to be 20. 80 rupees is what? Is nothing but WDV. Is nothing but WDV. We charge the depreciation at rupees 20 per year. First year we depreciated 20 rupees. Then the WDV of the asset being 80 rupees. The WDV of the asset being 80. Is that okay? Now, on the physical verification, we went to the market and inspected what could be the value of this asset. The asset value in the market may be 80, no problem in that case. Maybe 120, 90, more than our expected value. Maybe less than our expected value, 70. This scenario, you forget about that. So, on the valuation date, the value of the asset is more than the value we expected. Then it is profit, right? Profit scenario. And this is loss, revaluation loss and revaluation profit. Usually that revaluation loss, named as impairment loss, is named as impairment loss, coming under accounting standard number 28. You will study that in the later studies, not now. Now you just understand there is a profit and loss, that's all. Profit and loss. Is that clear? When there is a profit, that profit should always be credited in the revaluation account. Okay. See, profit should be credited in revaluation reserve account. The difference between these two, 10 now named as what? Revaluation reserve. RR account. In revaluation reserve account, it is going to be debited. 80 by adding another 10 rupees. Now the book value after this adjustment is 90, which is the WDV value. Whenever there is a gain, that gain is adjusted in which account? Revaluation reserve account. 80 on verification in the market, it is only 70. We lose 10, so subtract 10 from the WDV value. That loss is debited in the profit and loss account. Profit and loss account, debit side. Clear? If there is any gain, that gain is named as revaluation reserve and it will be appearing in your balance sheet in the liability side. Credit balance appears in the balance sheet liability side. Revaluation reserve account should appear in the credit side. And on revaluation, if there is any loss, don't adjust that in the revaluation. So directly debit to the P&L account. Is that okay? If there is no change, no need to worry about that. Next, in the subsequent year, second year, again I am going to subtract the depreciation. From the 90, depreciation 20 is subtracted. Now the value is 70. After this, again, go for the revaluation. This year, in the second year, we supposed to go for revaluation. Revaluation means cross verifying this value with the market value. I came to know that the value is not 70 by the time. This value could be, and probably 80, not 70, it's 80 today, or this value could be 70, no profit, no loss, or 65 or 55. These are the scenario I am going to discuss. 70, there is no any change, leave that. From the 70, today's worth is 80. On verification of the market value, we came to know that the value is 80, not 70. Because of increase in the value from 70 to 80, there is an appreciation. Appreciation by how much? 10 rupees. That any appreciation gain will be credited to which account? Revaluation account. This will go to the revaluation account. Revaluation account, credit in revaluation account. But in this case, 65, there is a loss of how much? 5 rupees. In the case of loss of 5 rupees, what will I do? In this case, 5 rupees loss, no, for this scenario. In the case of loss, usually what we do? Debit to P&L account. But in this case, this asset was revalued upside. Revalued upside means profit in the previous year. And that too, that profit is available in which account? Revaluation reserve account. See here. In the prior year, for the same asset was revalued upside, showing a profit of rupees 10. Showing a profit of 10. Right? Subsequent period, if there is any loss, verify is there any revaluation profit available. Yes, then it may be adjusted to the revaluation reserve account. Debit to revaluation reserve account. Is that clear? Okay. Second point, loss. Then first you have to adjust in revaluation reserve if exist. If it is not so, then second you have to adjust that in the P&L account. That is a rule. Right. In the second option, this option, no. In the very first scenario itself, loss. There is no any revaluation reserve exists, so I usually debit that to the P&L account. But in this scenario, first year there is a gain. That gain is kept in the revaluation reserve. Subsequently, there is a loss. Subsequently, any loss is there. Is there any gain in the revaluation reserve already exist or not? You just verify. If there is revaluation reserve, you just adjust this loss in that revaluation reserve first of all. In this case, if the value being 55, we are subtracting how much? Almost 15 rupees. Am I right? So you are subtracting 15 rupees. When there is loss, here is also loss. 65 is also loss. 55 is also loss. When the loss is 15 rupees, 70 to 55, loss is 15. What you have to do? Apply this rule. When there is a loss, debit first of all in the revaluation reserve to the extent of revaluation reserve availability if it exists. Now, how much of revaluation reserve are available for this asset for the time being? Only 10. So, out of 15 rupees loss, debit revaluation reserve account to the extent of 10 rupees. Still there is a extra loss, then the loss will be now adjusted in the profit and loss account. So, balance will be debited to the profit and loss account. Is that clear? So, the entire lecture what I am giving you here is represented in these 2 points itself. You have to memorize these 2 points, and how do I apply that? So, I am illustrating that here. Is that okay? So, from this very clear, if there is gain, that gain should always be credited to the revaluation reserve. Subsequently, if there is any loss, that loss first will be adjusted in the existing revaluation reserve. If it is not so, debit to P&L account. Right. Let me deal this scenario, 70. Subsequently, what happened? We faced a loss and it becomes 60. Or we gained 75. Or we gained 85. These are the 3 scenarios that are going to be discussed. In the very first scenario, from the 70, our expectation is only 60, right? If it is 60, we lose how much? 10 rupees loss is there. 10 rupees loss is there. When there is a loss, what do you have to do? Apply the second rule. First, you have to adjust in the revaluation reserve if it exists. Is there any revaluation reserve exist in this option? No. You cannot use this. Then what do you have to do? Second option, debit to P&L account. So, this will be debited to the P&L account. Debit in P&L account. If it is being 75, then what happened here? we have a gain. In this scenario, we have gain. In this scenario, when there is a gain, now go for the rule number 1. Profit. In case of profit, first, what do you do? Credit in the P&L account if any revaluation loss ahead of this charged. Okay. So there is a profit. Verify, is there any profit or loss account charged because of the loss? Yes, sir. Up to 10 rupees already charged the P&L account because of the loss in the previous year. To that extent, now when there is a gain, you have to credit it. To the extent of the P&L amount debited is going to be credited. So, this 5 rupees I am going to credit in which account? P&L account. Okay, credit in P&L account. Very simple. Then, if it is being 85, how much is the gain in this case? 70, but today it's worth rupees 85. So the gain being 15. When there is a gain, go for applying this rule. When there is a gain, profit, then credit which account? First, profit and loss account if any revaluation loss charged for that asset. If it is 85 showing a gain of 15, how much was already charged in the P&L account? 10 rupees. To that extent is now credited. Out of 15, 10 rupees is now credit in P&L account. First. And second, still you have profit more than that. That profit of rupees 5 will be credited in the revaluation reserve account. Very simple. So, this is the logic. Let me summarize that logic here and logic behind this. Revaluation reserve. Revaluation reserve is nothing but the profit or loss. Revaluation profit or loss is nothing but the profit or loss when you are going to compare the WDV of the assets with the market value. Finding the market value will be sometimes higher or lower than the book value. If the market value is higher than the book value, then it's profit. If the market value is lower than the book value, then it's loss. Whenever there is a profit, that profit should be always credited to the revaluation account. Whenever there is a loss, that should always be debited to the P&L account. Provided. Okay. When there is a loss, is there any revaluation balance available for that asset existing earlier? Then that loss will be adjusted in that revaluation profit first. When there is a loss. If there is any revaluation reserve exists and you have to adjust that first of all. And still there is a loss beyond that the revaluation reserve available, then debit to P&L account. Then debit to P&L account. When there is a gain, profit, is there any revaluation loss with respect to that asset was charged in the P&L account earlier? Yes, sir. Reverse that. Reverse that means crediting that amount of P&L account charged for the revaluation reserve to that extent amount. Do that first of all. First, profit and loss account, if any, on revaluation loss should be charged. That should be adjusted. And the profit available beyond this revaluation means profit and loss amount debited already, then any balance will be now transferable to the revaluation reserve account. So these are the two processes. So first year, how do I understand? First year is very simple. Profit should always goes to revaluation reserve account, credit side. And first year loss means it should always be debited to the P&L account. There is no any confusions. In the very first year, no confusions. Loss, debit to P&L account, gain, credit to the revaluation reserve. From the second year onwards, year 1 and year 2 onwards. In the case of year 2 onwards, in case of profit, first you have to adjust or credit to the profit and loss account to the extent the loss already charged. See, in case of profit, first you have to now reverse the P&L account. You have to reverse the P&L account. Okay, in case of profit, then credit to the extent of profit and loss account if any revaluation loss charged. So profit and loss, it should be credited to the revaluation the profit and loss account, where to the extent of revaluation loss charged in the P&L account earlier. Charged in P&L account earlier. So this will be applicable from second year onwards. In case second year, if there is any gain, second year. Okay. First is you are going to charging that this, and if there is any profit again available, then that will be transferable to the revaluation account. Sorry. If there is a profit in the next year, first credit to the P&L account to the extent of loss debited with respect to that assets in the P&L account regarding the revaluation. So that's the first point. Still there is a profit beyond that, then that profit will be transferable to the revaluation. So in case of profit from the second year onwards. In the second year, rather than profit, if I face loss, what is the first step? In case of subsequent loss, first you have to adjust the loss to the revaluation account to the extent of amount available. Right. Number one, debit to revaluation reserve account if exist. If there is no such revaluation reserve exist for that asset, then what you have to do? Second one will be debit to P&L account. That's is that okay? This is what about the revaluation aspects of asset. Come on, make a note of it.